Hello, hi friends. I am Javid Mumra. I started my new YouTube channel for online bookkeeping accounting. Today is modern time, so this time no require to totally paperless. So no requirement to paper. Totally digital accounting. In digital modern time, I will explain general accounting terms and forward to next software generation, which all softwares are directly linked with mail ID and PDF formatted to attach to all the expense, voucher, purchase, sales, bills, and you can directly reconcile your bank statement also. Which softwares, many softwares are available. Those softwares are QuickBook, Zero, SAP, and many others. So let's start. Online bookkeeping. If you are working in a paperless technology and online, so you have knowledge about your basic account, ledgers, accounts, basic terms, regulations, all the things. So now we are start first to our trading account, profit loss account, and balance sheets. Three basic statements for the finalization accounts. In a trading account, two types. One is debit, one is credit, which shows your business trades and stocks related all details. Then P&L account, profit loss account. Profit loss account will show your income and expense. Then balance sheet, show your liabilities, your assets, your cash, bank, working capitals, etc. So let's start to trading accounts. So start the trading account. In a trading account, you will see here two sides. One is debit and second is credit, right? In a debit side, you will see first opening stock. What is meaning by opening stock? When you started a business with opening stock, which you have available stocks like if you are a bookseller, so you have available book copies or papers, is called opening stock. Then your purchase account, when you purchase material, otherwise if you are traders, so you purchase all the trading related products which are mentioned here in a purchase account, totally purchase. Here not including your assets purchase, so be careful, take it. Then your direct expense, which are related to purchase. When you are purchase material and paid transportation expense, so you have mentioned transportation expense in a direct expense, which are business related expense. Then we will go to credit side. In a credit side, we are mentioned first to sales account, then we mention here direct income. Sales is a general sales which you purchase raw material and make finished goods, and sales its sales account. Working process also mentioned in here, credit side of trading account. Direct income, then closing stock. When you are purchase some products in a quantity, then you sold and some amount quantity remains, which called to closing stock. Then either you get gross profit or loss, all the things. If you are profit, so you get to gross profit from debit side. If you are get loss, so receive gross loss from credit sides. So I Hopes you understand this. If you have any query, so you can mention here in my video. Then we are going to profit loss account. In a profit loss account, two side also same as trading account, debit and credit. Then carry forward our profit either loss. Either we receive in a trading account gross profit, either we receive gross loss, anyone. Then we have carry forward is mentioned here, both side, debit or credit. In a debit side you have loss, so gross loss mentioned. And if you received gross profit, so you have mentioned in a credit side. Then in indirect expense, which are related to salesman expense, to traveling expense like stationery expense, accounting fees and other fees structure for the business, depreciation also mentioned here. And some patents trademark expense which you have legal fees paid, staff salary remuneration, directors and the other all the mentioned here. Then credit side, income. When you received commission, brokerage, incentives, so you have mentioned here indirect income. Then either you receive net profit or net loss. It's similar trading account. Next we will go to balance sheets. So let's start to balance sheets. Now balance sheet, here two various side. First side is liability, second side is assets. Liability shows business total liability and assets shown business total assets, total value which are available, fixed assets, tangible assets, intangible assets, working capital, all things here. So let's start first to liability sides. Capital account, equity capital, which show owner's capital, business promoter capital. When you investor any amount invest in a business, that mention here in a capital account, either equity capital, equity share, preference shares, all are mentioned in liability side. Then in the business have required money, so he lend from any other borrowers and give some pledge like assets, machinery, lands, so it's called to secure loan. All secure loan mentioned here. Then if the company gets loan from without any pledge or securities, so he gets unsecured loan, is also mentioned here. A bank CC, bank overdraft, when bank given to person to some extra money from which available banks. Suppose if your bank balance $10,000 and you will pay check 11,000 rupees, so it's 1,000 negative cash, so it's generally not past the bank, but in a bank credit card, credit and bank overdraft, here you can pass this if your facility service available in your bank. So bank CC account, cash credit accounts and bank overdraft facilities. Then we see sundry creditors. What is mean by sundry creditors? Sundry creditors is when you purchase anything by debt, some credit periods, so you have paid, so that's your liability, and it's liability called to sundry creditors. Now last topic in the liability side is other tax liabilities. All the tax you have liability to pay is also mentioned here, is liability side, other tax liabilities. Then we will go to next side, asset side. In asset side, fixed assets. What do you mean by fixed assets? Fixed assets, which means you can touch it, which cannot movable, like land. like plant and machineries, like furniture, which all are called to fixed assets, which companies. Then investment. When company or firms your clients invest in anywhere, like if they invest money for share market, for mutual fund, SIPs, so it's called to investment. They purchase bonds, any government regulates investment. These all are also mentioned here investment. Then sundry debtors. Sundry debtors means when business firm sell his material product by credit period to his customers, then all the customer names here in a head of the sundry debtors. All the sundry debtors is our assets. They will receive the money from all the customers. So here is sundry debtors mentioned. Then total available closing bank balance cash available in a firm, which also are the assets of the firms is mentioned here. Then also bank company has available stock, closing stock is also mentioned here. And deposits. When the firms get any connection, light bill, phone bills to pay deposit, some agencies gets that time is give the some security deposits. So it's also mentioned here is set aside deposit because they give to any other firms. Then provision. In a provision, when the year ending, that time some expenses are prepaid, otherwise postpaid, in advance paid, but not actually expense this year. This next financial year, so it's called to provisions. Provision also mentioned here prepaid expense or prepaid income. So provisions may be comes in asset side also and asset liability side also. That is not a fixing to any sides. It comes to both side, liability and asset side. I hope you like my video. Maybe I will update it features to next how to bookkeeping in zero accounting software, big book accounting software, SAP accounting software, and many other softwares. So I hope you will like my video and share. Thank you.